Over to you, Yamini.
Hello, everyone. Thank you so much for joining us this evening, and good morning to a few on the other side of the world. I'm so excited to be your host and moderator for today's session. Let me kick off by first congratulating Mumbai FinTech team on their third anniversary. Maharashtra has been one of the first states in the country to really draft a FinTech policy and sets the base for many discussions going ahead. And with that, I would love to start introducing speakers that we have with us today. We'll start with Brenda, who I'll then hand over for opening remarks. Brenda is the Principal Commercial Officer assigned to Mumbai since September 2019. She's part of the US Department of Commerce, and in this role, she directs commercial services teams in Mumbai and Ahmedabad for assisting American businesses with market access, information, and advocacy in this region. Welcome, Brenda. Thank you so much for making time. Would love to hear from you a little more about yourself, your passion for this space, and if you could help kick us off.
Absolutely. Thank you. So good morning to everyone who's joined us from the US, and good evening to our Indian participants. Thank you all for joining us today on this webinar. As mentioned, I'm Brenda Van Horn. I'm the PCO here in Mumbai, covering the Western region. And to tell you a little bit more about what we do, we are the only US government agency that has both foreign and domestic offices dedicated to connecting US businesses with companies all around the world, here in India, of course, with Indian companies. So first of all, I want to thank Mumbai FinTech for their support and collaboration, and for this opportunity to speak to you. And I also understand I need to say happy anniversary. So congratulations on completing, I think it's your third year? Correct me if I'm wrong on that. It's my privilege to welcome you to this event and to introduce you to our esteemed panelists and moderators. I'm just going to say the names because you're going to get more of an introduction later. We have Matthew Hatch, Jacqueline Vitillo, and Yamini Bhatt, who's already with us here. So I'll let you finish the introductions later. But I'm especially looking forward to hearing from you, Yamini, to hear about your experiences and how you've navigated the US FinTech market. I'd also like to take a moment to recognize the members of the financial service community. They're really the unsung COVID heroes who, during the height of the pandemic lockdown, ensured the undeterred supply of the world's banking and payment transactions. You know, certainly the COVID-19 crisis caused significant economic impact, yet many businesses were able to mitigate financial risk thanks to advances in financial technologies and digital payment solutions that allowed work to continue remotely. And, you know, it continues to change the way we live and work today. I learned during the first few weeks of the lockdown that the majority of the world's financial transactions pass through India. And in the time since then, I've learned that India is one of the fastest growing countries with very strong trade, political, and people-to-people connections with the United States. And I'd like to take just a few minutes to highlight the US-India trade relationship. We've made great strides over the past decade. We've gone from 60 billion in trade in goods and services in 2009 to 150 billion in 2019. That's really impressive. And that increasing trade leads to business and investment opportunities on both sides. The US economy, with the annual GDP of 20 trillion and the largest consumer market of more than 325 million people, is one of the largest market opportunities in the world. And investment in the US means reaching an ideal customer base with a high per capita income. It means availing of the services of one of the most productive workforces and leveraging innovative sector ecosystems. And it also will give you a base for all of your Western Hemisphere operations. So many of the Indian business and investors who have made foreign direct investment in the United States profitable, such as software, IT services, they're at the top of the industrial sectors with investments from India into the US. In fact, according to FDI market data, between 2015 and 2020, investment in the United States by software and IT service companies from India was estimated to be 2.7 billion. That's a lot of success. Technological innovations in the financial service sector have increased, and it's sped up the way we complete financial transactions, make and accept payments, manage assets. And our pandemic response has made those innovations not only mainstream, but a necessary part of our everyday lives. And I congratulate, again, Mumbai FinTech Hub for recognizing and promoting this industrial sector as an area of opportunity for Indian businesses wishing to expand to new markets. You know, movement around the world may be restricted. We were talking about the lack of travel just a second ago, but it really hasn't stopped business or the need for connections. Our commercial service office is busier than ever, bringing US and Indian businesses closer together through virtual services such as this webinar. We've been doing online business-to-business meetings and even roundtable discussions. So I'm very pleased that Jacqueline is with us here today. She'll speak to us more about the resources available through the Department of Commerce's Select USA agency and our Select USA flagship event, the Annual Investment Summit, which will take place on June 7th and 11th. I'm not gonna say any more about that. I'll let Jacqueline tell you. In closing, I just wanna say that I hope that you'll find today's presentations very insightful and that you'll be able to leverage the welcoming business environment in America to grow your business. And just finally, one thing I want to say is that when you invest in America, we invest in you. You will be able to avail of all of the services of the commercial service once you're located there. And happy to answer any further questions about that you may have. Please do direct them to us after the event. Thanks.
Thank you so much, Brenda, for kicking us off. The big focus of today's discussion is going to be how to think about US as a market for Indian fintechs, right? And how to leverage Jacqueline's team, Brenda's teams to be able to get there with lesser friction than we would have otherwise, right? So thank you so much, Brenda. And a quick introduction about myself, and then we'll go around the table. I'm Yamini. I'm a co-founder and CEO of Waymo. Waymo is a Series B SaaS business exclusively dedicated to increasing sales performance with financial institutions. We work with more than 60 financial institutions across the world, including United States on the westmost and Japan on the eastmost. And this topic is extremely close to heart because cross-border is not easy for anyone to think through and expand. But there is a lot of effort that has already been done. Any new fintech or any startup looking at this, it's probably not the first time someone has encountered the same journey and challenges. And it's so much easier when you can get guided by folks who have seen this happen again and again, right? So you just short circuit a lot of the friction you would have otherwise faced. So that's the reason I'm here. And I'm excited about moderating this panel. Today, on the panel, we also have Jacqueline Vitello. Brenda briefly introduced her. Jacqueline is the Deputy Director of Programs and Events at Select USA, a subset of the US Department of Commerce. And her team is very heavily focused on attracting foreign direct investments into different communities across the US. So welcome, Jacqueline. And Jacqueline, just anything more you want to add on your intro? And I would love to hear two things. One is, why do you care about this space so much? And second, just tell us a COVID story, something that you learned or started doing in COVID that you've never done before.
Sounds great. Sure. So I think between you and Brenda, you really introduced Select USA and what we do. But companies, foreign companies, to opportunities in the United States. So if you're interested in coming to the United States, and we'll talk more about this and go into depth about the resources later in the conversation, but between the team in Mumbai with Brenda and her team and myself and our team in Washington, DC, we can help and we can make it easier. And importantly, many of our services are free of charge. So there's not a huge barrier to access for our services either. So why do I care about this space? For FDI and government in general, it's that sort of call to serve and help people and help the community and boost, economic recovery right now, but also boost the economy in general in the United States. And you can see that in the work on a regular basis, right? Helping a company like yourselves, come to the United States and make your dreams come true and grow is huge, and that's important and it's impactful. But also helping the states on the other side of it and seeing the local economies grow is an awesome feeling, right? And then on the COVID story, I did jump on the sourdough baking train that a lot of people jumped on. So I I've always been a good cook and I've always loved to cook, but now I've got a starter that I keep and I treat it like my child and feed it every day and make bread quite frequently and, get to reap the rewards of eating it, which is fantastic and something that's, I think a lot of people sort of jumped on in the US. I don't know if they did in India as well.
Yes.
Too. All right. So we share that. Great. I love it. I absolutely love it. Yep. You too? Awesome. Matt, did you?
I did. First week I started making a starter.
All right, so that's something in common. Fantastic.
Thank you so much, Jacqueline. Great to have you here. Let me introduce Matt. Matt is the America's FinTech and Growth Markets leader within financial services organization at EY. And Matt, you've been in the space for more than 20 years, right? Serving both financial services, financial institutions, as well as technology companies. Welcome. We're so excited to have you. And again, same two questions. Why do you care so much about this space? And tell us one COVID story, which you don't get to ride the sourdough wagon after this, something new.
No problem. Thank you very much. And thank you to the rest of the panelists and the team behind this for allowing me to be a part of this. Matt Hatch, as Yamini said, I'm a partner at EY. I've been here for now 22 years, which is quite a long time in professional services. But I have a lot of fun. I did split my career in the first half focused on technology companies here in Silicon Valley. I'm located in San Francisco area. And then in about 2008, kind of an interesting year, I started focusing in on financial services, learned a lot, but also was fairly concerned about the lack of innovation. And I started looking out at companies that were doing things a little bit differently and my interest in being close to entrepreneurs and found some of the earlier FinTech companies out here in the West Coast and really just started building our strategy and our practice at EY around that at that time. Fast forward 8 years, we serve over 300 clients in the FinTech space. FinTech for us is everything from payments, lending, robo-advice, insurtechs, cryptocurrency, and then a lot of the enabling technologies that are supporting innovation. So it might be AI or other types of technologies that are not necessarily regulated financial products directed towards consumers, but are enabling innovation at startups, but also at large incumbent institutions. What am I passionate about? I am absolutely passionate about helping entrepreneurs be successful. It's fun, quite frankly, and I believe in what they are doing. I believe in what they are changing in the world. I'm grounded in the reality that we can have better access to financial services products for people today who are very much underserved. And I think the cost of financial services can and should come down. I think the way that we help people achieve financial success at a lot of these companies is becoming more intuitive, and we're having better outcomes for individuals, folks that didn't have access to financial services or those that did, as it changes their lives. And that's something that I feel very positive about. I'm motivated by it, and especially in my role in helping those entrepreneurs be successful. So it's been a lot of fun, and I'm looking forward to certainly the discussion here this morning and hearing more about all the rest of the panelists. My COVID story, so as I acknowledged I think it was the very first week I did it. It was great. The other thing I had always wanted to do and never made time for was yoga. I'm a big runner and mountain bike rider, and it takes a toll, but yoga has been just incredible for renewing and flexibility and just mindfulness. So I'm doing my best to keep at it a couple times a week and having a lot of fun with it.
Fantastic,
So
Matt. Thank you so much for sharing. So I have a ton of questions in my mind already about this topic, given I am one of the entrepreneurs who is actually doing it cross-border and we work very deeply on our cross-border efforts. So Matt, my first question to you, for anyone like me, like a startup, potentially in the fintech space, what is the big advantage of you looking at US as a market? One is the market access itself, which is much talked about. So anything you can help in terms of quantifying that. And second, is there advantage beyond just market access that should be kept in mind?
Yeah, it's great. So it's a good question. It's a very broad question too, in terms of like my thought process of how I think about it. Certainly size is relevant here. It's a large market, right? It's an affluent market. And there's a lot of opportunity in that. I think the other part of it being large is that it is extremely vast, right? There are many different use cases, I think, in terms of areas of innovation and opportunity and need, quite frankly, from many of the consumers and businesses here. And I'll think about it, or I'll talk about it in both those constructs, consumers, as well as more of the B2B space, and serving a lot of the financial institutions that are really hungry to innovate. And then I'd say even more so recently, it's beyond financial services. So I think there's been a lot of talk for the last couple of years, and we've seen financial products coming out of the large tech players, Google and Apple and others. But I think you got to look beyond that as well. So I've over just the last 4 or 5 months, I've had even more conversations with companies that are way outside of that domain, not tech, not financial services, but that are developing fintech programs, right? And so this would be B2B suppliers of products that are trying to help their distributors be more successful through the pandemic and through the economic cycle that we're working through. And so they're thinking about lending products, they're thinking about payment products, they're thinking about how they can embed better financial services into the business of the consumers that they're working with. And so you see these fintech initiatives popping up in places, in companies, quite frankly, that 2 years ago, I had no idea we would be talking to today about fintech. So again, when I think about the US market, I would think about it much more perhaps creatively or more beyond just the traditional boundaries that you might normally think. I think with that also comes a need to be focused, right? Especially when you're just first entering a market. There is absolutely need to understand that this size of this market here, but to be focused on particular use cases that you have a proven capability in, and to approach it in that way. Second thing I would go into beyond sort of the size and the vastness of the market is collaboration. I think it's come up a couple of times in some of the comments that I've already been made. I think this is a market today more so than even just 2 or 3 years ago that knows that success is going to be necessary to work with other innovators. More and more incumbents or established financial institutions are looking for assets and capabilities that have been developed by startups. They are looking more and more globally as well, right? And I think there was a propensity several years ago to think about that as something that should be, coming out of Silicon Valley. And I think today people are thinking about that differently, especially when I think about India and its proximity to Asia and the proliferation and success of fintech products out of Asia over the last 5 years. I think companies now are more invested in collaboration, more willing to set up lab environments to participate in some of the incubators and accelerators that are out there globally. So that's, I think, a big advantage that you guys have as it relates to building relationships. And certainly my advice is spend time to build those relationships. The last point I'll make on this too is I think that there's a lot of headroom for adoption, meaning the US, and we've done a couple of different studies over the years, 2015, 17, and 19, EY did a FinTech adoption index study. And this is a little bit more focused on a consumer adoption of FinTech products. And the US was a little bit of a laggard behind the rest of the globe. And certainly that's caught up quite a bit. And then within the pandemic, we did see a huge acceleration of adoption of demographics that really had been slow to adopt. So older folks that are now heavily using digital services from their financial institutions or from new fintech companies. So we have a lot of headroom, as I say, or adoption growth to go here. And I think that we're still going to see a lot of opportunity in the fintech space. If you look at the funding of startups of the last year, it's gone crazy. There is a lot of money moving around, and I think that's indicative of the opportunity in this market. So those would be the three things that I wanted to focus in on, that in terms of the size of the market, the collaboration, and then, as I said, the opportunity or the headroom in terms of adoption that's still to go there.
Got it. Jacqueline, anything to add?
Sure, yeah, I think you really said it all, Matt, but just to sort of phrase it a different way from that, trying to attract companies directly to the United States. And you said this, but it's really a culture of innovation and entrepreneurship across the country, right? And that culture is ready to support companies like you. And it's not just in Silicon Valley or the other big cities that you might be thinking of, right? It's across the United States and in a lot of different cities that you may never have heard of, right? And those cities and the companies that are there and the institutions that are there are ready and willing to support you if you've got good ideas and you're willing to work hard, right? And you've got a good product. That goes across the United States. There's a huge culture of wanting to support startups like you with good ideas. The other big things beyond the market access and the advantages of the United States, Brenda touched on briefly in her opening remarks, but strong IP is huge in the United States, and that doesn't exist everywhere across the world, and is important for companies like yours. We have, a talented and diverse workforce that you can take advantage of, and that does exist in a lot of different countries, but there's a lot of opportunity there. And that access to capital that Matt touched on is another big advantage. Of course, I do want to caution there that a lot of companies like yours will try to raise that capital from afar in the United States. It's much easier to raise that capital as a US company, to raise that VC, Series A, Series B, whatever it is, much easier to raise it as a US company. There are exceptions to that rule, of course, and Yamini, I don't know if you want to speak to that at all, but much easier to be in the United States to raise that capital. So if you're thinking about doing it the opposite way, you may want to think more about that strategy.
So Jacqueline, that is very interesting, right? You actually spoke about one thing that I wanted to understand more of. For someone sitting here, US seems like is a massive market. I think I've read reports which say that almost 60% to 70% of consumption in, say, consumer goods or software, right, or even services is usually US of global consumption, 60 to 70% of global consumption, right? So that itself shows how big a market it is. If you are at an X million revenue in a market like India, it could mean that that's almost 60 times X an opportunity in the US, right? But still, when someone looks at US from here, it seems like one big market. And you spoke about the fact that it's diverse and it's many potential micro markets, many niches. Can you speak more on that? Are we speaking geographical, vertical, customer segments? How many ways would you cut it?
Sure, yeah, and Matt touched on this a little bit, and said it's vast. The market is vast, and I think this should be at least. I think Indians might have a bit more of an easier time to understand this because India is many different states, right? And different states that work together in different ways, unlike a lot of other countries that are smaller and have a single market. But every state has its own tax system. Every state has its own, workforce regulations and employment laws. And in addition to the federal level, right? And that's not even counting the local levels and the county levels and the city levels that have all these regulations. And so to be able to understand all of that, you either, need to get yourself a consultant like Matt, an attorney, an advisor, which you probably should do no matter what if you're considering entering the United States. and get some support on the taxes and the visas and all of those things that you need to understand. But also, we can help. Select USA can help. It's difficult to understand. And like I briefly mentioned, one of these huge cities that you're considering or maybe considering right now may not be the right place for you. A lot of these smaller cities that, again, you may not have even heard of, can provide more one-on-one support and will provide more one-on-one consultation and may be able to provide different types of incentives and things. So some of the ways that we at Select USA, along with Brenda and her team in Mumbai, can help are we can do one-on-one consultations with companies like yours and try and dig into what your needs really are. You may have an idea of what you think your needs are, but you may have a ton of questions that you don't even know where to start. And really what we're trying to help you dig into is what locations across the United States might make sense for you. So we have an hour, 2 hour, however long it takes call to dig into those needs. And then we have a data and research team that can pull together a report for you based on those needs that may be workforce needs. They may be things like utility costs. They may be proximity to R&D centers. They may be proximity to accelerators and incubators. It could be any number of factors. And then we'll produce a report that gives you 3, 4, 5 different locations, top locations across the United States that really make sense for you as we see it based on data. Because we are geographically neutral. We don't drive anyone to one state over the other or one location over the other in the United States. And then once you've narrowed down your search, we can help you make those connections to those states and cities and localities. And then that's where you really start to dig in. If you've narrowed it down to 2 or 3, then you start to talk to those 2 or 3 states or cities in the United States. And you get introduced to the local ecosystem, to the local companies, or make those B2B connections. If you're going to land in an accelerator or a soft landing program, something like that in those cities, then they can make those connections. They can make connections to local capital potentially. And that's where you really start to narrow in on decisions and where might make sense for you in the United States. We have a number of other services, some of which are these types of educational events and things. If you're really just starting out and considering, I would encourage you to check out, we have an investor guide on our website, selectusa.gov. And that sort of lays out, and we're adding chapters to it every year, but lays out the basics of taxes and visas and these things that you might be thinking about and not knowing where to start. So it's a really good starting place, but yes, it's difficult to navigate. It is one big country, but it's really 56 different countries, and that's the states and territories, including the Puerto Rico and the Virgin Islands are the 56. I know there's 50 states, but we say 56. So yeah, if you don't know where to start, or if you'd like our services or our help, then we'd love to talk to you.
Yeah, I think it's interesting. I completely agree with that. In fact, I was reminded of one of our US origin stories. Since we serve financial institutions and about 50% of them will be headquartered in the New York area, we assumed by default that our head office needed to be somewhere in downtown to central New York, premium real estate, right? And then when you have these customer meetings, you realize it's actually not based out of New York. Folks are based out of probably Ohio or all over.
Right.
Therefore, you're actually doing virtual meetings. You need not have gone down the path of investing for such an expensive office downtown New York, right? So I think many of these are things that someone may not be aware of looking at from a distance, and you lose a lot of time doing experience. Could have saved hours in commute, could have saved hours in commute to just the airport, right? By just picking a different place. So yeah, many things which are myths which may not be real once you actually. Matt, I had a question for you. What would give an Indian startup or fintech a leg up in terms of advantage as they approach US as a market?
So yeah, that's a good question. A couple of things come to mind for me when I think about that. I think there's product focus, and then let's talk about more sort of business development, maybe dynamics of it. Product focus, as I mentioned earlier, right? I think you've got to pick a use case or pick a subsector of the market and be very relevant in that. There are some areas where I see continued investment in terms of the U.S. probably competitively being behind. Number one, open banking, where I think we've sort of watched the rest of the world get more organized on that and be more successful. We have a lot of connectivity between financial institutions, technology companies, Fintechs that is point to point, and it's not efficient, not scalable. So I think that from a opportunity perspective in terms of how you think about helping companies better connect on an efficient level, financial information that must be shared. I will say that's a complicated space from a regulatory perspective. We have not done as much in the US to clarify who owns what financial data and how that financial data must be shared. And you see that in other geographies, that's become much clearer. And from a regulatory mandate, how that's then allowed technology providers, Fintechs, to develop solutions to enable that. So that's one area I would say stay observant of and look for opportunities in. Embedded finance is another that I see a lot of focus in, and that is, how do you connect a financial services product into existing systems that are out there, whether it's ERP systems or other technologies that companies are using to run their business, so that the rhythm of making payments, of invoicing, collecting, of seeking funding, a lending product is more synchronized with the business and less manual intensive, right? That is a trend that is happening everywhere. We see it in the SMB space especially, but I think it's also in some of the examples I made earlier around like non-tech, non-financial services companies getting into the fintech space. This is a really hot topic for them, is how do they embed themselves into other technologies? It kind of goes back to my point earlier, the point that several of us have made around collaboration as well, because I think there's collaboration that is not necessarily within, could be within other adjacent technology providers that you need to integrate with, and not in order to bring a cohesive product to the market. The other is globalization. I think India companies have a unique capability in this as well, and it's an area where I do believe more and more companies in the United States are going to be seeking outside help outside of our borders. FinTech in the United States has, I'd say, been surprisingly focused and insular on the United States market, and perhaps for obvious reasons. But what we're seeing is a lot of other companies globally now reaching out and crossing borders and doing it very successfully. So if you think about the banking and payment space, companies like Revolut and Monzo and TransferWise and N26 all have penetrated the US market from abroad and have done quite well. There's very few examples outside of perhaps the largest one, PayPal, but very few examples of companies that have really done that from within the United States and created a true global product. So I think that's top of mind for a lot of folks as well when they think about what they need and where they would be especially interested in hearing from ideas and talent and entrepreneurs coming out of India.
Man, that's very interesting. Are there one or two success stories that you think could be really good examples of what helped some of these founders to actually find success in the US? What mattered most, mistakes that could have been avoided?
One thing that I see time and time again is so there's a lot of diligence done by any company, and I'm perhaps speaking more to the B2B space with this comment, and I've seen this be a struggle frequently, and I've seen others be very successful managing this. And that is, plan for extremely long sales cycles, plan for a lot of diligence and governance concerns from the target institution that you're going to be working with. It's even more elevated when you're not established and headquartered in the United States. So what do you do to combat that? One, plan for it. Two, anticipate their questions, right? You certainly have to lead with your product. Your second slide, if you will, has to be governance, has to be, and when I say governance, I'm talking information security first and foremost, and probably secondly, financial viability of the company, right? One of the biggest challenges all startups face is getting the first customer and being able to grow from that. So very few companies, especially here in working with a company from abroad, are not going to want to be the first customer, right? And that's where I think, the point that's been raised several times today, collaborate and find ways to build partnerships in the United States that can help you establish some credibility early, are going to be really, I think, important to overcoming that. But I think you have to anticipate these governance questions that will come up. And like I said, I think security, financial viability of the company, and being able to prove and demonstrate that you've got a track record, even if that track record is not within the United States, are going to be critical, right? And I think if you have clients or business partners outside of the United States that are doing operations in the U.S., they can be helpful to you as well. Hopefully, and if you can leverage those relationships. But those would be the things I'd think about. And like I said, the sales cycle is a lot longer than anyone wants it to be. And you have to understand that. And there's a lot more behind why that is and how companies are thinking about doing proof of concepts and use cases before they actually dive in. And that might be with 2 or 3 competitive products, if there is 2 or 3 competitive products in the market for what you do. And you'll need to work through that. And that could take 3 to 6 months before you're actually starting to talk about contracting and eventually, closing the deal and winning the customer. So it's a long process. It's a challenging one. And it's one that I think you actually can be there. I would say most are not prepared for it. And it's something that I would encourage everyone to think through and to seek advice around and to plan for and have material ready, anticipate their inspection or audit needs, have the package ready of things that they're going to request: security policies, security audits, who your cloud service provider is, whether it's AWS or Azure or someone else, and that you've looked at their SOC reports and you have an understanding around sort of the governance of your product and why your client should feel comfortable and secure using you guys. That is something that a lot of companies don't lead with. And like I said, I acknowledge you probably have to lead with the product, but that has to be a fast follower. So that would be my advice in that space.
It's very relevant. It resonated a lot with what we see, Matt. Very good points. Do not first of all plan for the amount of time this is going to take, because it's a new market, you are a new face, and for someone to make that bet, they need to have a lot of conviction. So which is where the second point, right? Like focus on building that conviction, at least make sure that they're not getting into any risk because of this. A POC should not have to have a massive downside. So security and how you handle awareness of SOC to GDPR, whatever is relevant in your verticals especially, is highly important. And there could be, it's interesting because for these now, it doesn't have to be that you have an in-house expert, right? Because that's where these teams like us can leverage teams like you to actually help us navigate rather than trying to build this expertise on day 0 in-house. Yeah, that's very helpful. Jacqueline, any success stories that you have seen and what stuck with you as what mattered most in those cases?
Sure, we love to talk success stories. It's one of our big metrics, of course, as a government body. But I've talked a little bit about our services in general, but in 2019 at our annual investment summit in June, which is our big annual event, which I want to make a quick plug for, which will be this year, June 7th through 11th, 2021, and it'll be virtual. So there's a sort of lower barrier to entry this year. And I'd encourage you all to attend, but we will have, and we established what we now call the Select USA Tech program at the 2019 Investment Summit, which is geared directly towards entrepreneurs like yourself, foreign entrepreneurs who want to land in the United States, who of course have different needs than small to medium-sized enterprises and large multinationals, who were our traditional clientele. And so now we have programming and all kinds of services related to entrepreneurs. And so in 2019, we had I gave our colleagues like Brenda and her team about 2 months. We before the event, we established this program. And so we gave them about 2 months to recruit and attract entrepreneurs who wanted to attend. And in that short 2 months, they recruited over 100 companies like yourselves, not all in the fintech sector and all kinds of different tech sectors, but over 100 companies from 30 different markets, 30 different countries around the world, which was impressive and shows the demand and the need that entrepreneurs like yourselves have for more information about the US market. And so that was June 2019. And since then, over 40% of those companies now have an established presence in the United States, which is huge. And that shows that, you know, these are companies who are really serious about it. A lot of these made those connections at the investment summit. And since then, we have one success story that's a Tunisian company. It's called Epalert, and they do early detection of epilepsy. There's a video up on our website, and he goes into the founder goes into clear detail about, you know, he met dozens of states and cities and essentially had 5 offers from those states and cities by the time he left this 3-day program. With clear, you know, direction and incentive packages and, you know, where he could land, the companies he could be introduced to, and the network he could be introduced to, et cetera. So there's a lot of opportunity there, and we love to celebrate these success stories. I could go into depth. I would encourage you to check that one out. Brenda went over, you know, the Indian investment in this sector in her opening remarks, so I won't repeat all that. But there's tons of momentum, there's tons of support that we can provide, and we'd love to celebrate these successes. So if you, again, just another plug for our services, which again are mostly free, so there's no reason not to take advantage of them. We want to help companies like you. This is our mission, right? To help companies like you and support you in your journey to the United States. So if you're interested, get in touch with either Brenda and her team or myself, and we're ready to help you start this journey.
Fantastic, Jacqueline. One of the things that's a very big unknown bubble, right, is Matt, question for you, is the whole regulatory and compliance space. Because the unknowns there could literally kill you, right? And it's not very structured. If you don't know what question to ask, you will never even find out, you'll not find out the answer before it's too late, right? So Matt, can you help us think through how to think of regulatory, what matters, and any hacks that you would recommend?
Yeah, absolutely. It's a complex. I mean, I think Jacqueline, you touched on this a little bit earlier with our states, and it's the regulatory environment in the United States is challenging because it is so complex, and there are different state rules and federal rules that that financial institutions and fintechs have to understand in this market. So certainly it's complex, but I think there's a lot of support for it. There is an open dialogue that has evolved, I would say, over the last couple of years with a lot of regulators on key topics that have been evolving. I'd say we are leaving a environment, meaning the last presidential regime that was in the office was very, very much focused on reducing regulation. And so it was hard to establish new things. When I met with regulators, it was hard for them to establish new rules that were answering key questions that innovators had, right? And I raised one of them earlier, right? Who owns what financial information? How must it be shared? It was very difficult for them to put forth new regulation on those types of topics. There was a sort of a mindset of need to take away 2 things in order to add 1. So we're leaving that environment now with a new president, and we'll see new financial regulatory leadership come in, or maybe not new leadership in all cases, but certainly a new tone to how they think about enabling, quite frankly, enabling innovation. And that's how I've looked at it. And that's when I go to Washington and meet with some of our regulators, that's the mindset that we have, right? Because I think that's it is absolutely important to allowing fintech companies to innovate and to be successful. So as I acknowledge, it's complex. There's state rules and federal rules. Certainly state rules as it relates to payments and lending are very prolific, and you can take sort of a state-by-state approach. So if you are entering the market, and I guess it's a little bit easier to think about this in the context of a consumer play where you might just want to serve customers in a particular geography. You might only need a state license. Those are a lot easier to obtain. So state money transmitting licenses or state lending licenses. If you're going to approach something on a national level, you might need a banking charter, which is very difficult to obtain. So these are sort of two ends of the spectrum here in terms of complexity and difficulty. And that complexity and that difficulty, I think, has a corollary relationship with the collaboration that we mentioned a few times throughout this discussion. So there are a lot of fintech companies, even ones that are quite large, that are still today operating in the United States with a relationship with a licensed financial institution. So on the back end, there is a bank that is the ultimate custodian of funds or of deposit accounts. Many large payment providers today still work that way in the United States, and they're not banks. They still have obligations to those banks, whether it's related to money laundering or other compliance requirements, but they are not the chartered financial institution. There's been very few new banking charters issued in the United States over the last couple of years, and we've seen a number of fintechs that have been going after that space, and just now are starting to get approvals for new new banking charters. So yes, it's complex. I would say that there's also, like I mentioned earlier, a mindset of collaboration, and you can get to the regulators. You can have discussions about your approach. You'll seldom get a stamp of approval, but you'll get insights and free advice, quite frankly, and that you might otherwise need to go to lawyers and hire lawyers or other advisors to get. So there's some interesting, I think, opportunities out there right now in terms of how we think about the changing dynamics of the U.S. regulatory landscape. But certainly, hopefully, my comments have been helpful in distinguishing a little bit of the federal versus the state, the complexities, and the opportunity for how you can collaborate with other established or chartered or licensed financial institutions in the United States in order to launch a product more rapidly, rather than having to go get individual licenses, depending on what the nature of your business is.
Yeah. So to just get leverage and get cross that what could be a potential speed breaker, or rather a very long cycle into getting your own license versus partnering with someone, right? So Matt,
Right.
just if I take one example, fintechs targeting SMB market in the US is pretty big deal, right? There was a lot of noise about the opportunity there over the last year or so, and even before that. If that was the target audience for a fintech coming from here, what would you see as the easier path? Like go with a regional partner who already has a license, or avoid the national, discussion yet and go from one part of the country? How would you think about it?
Yeah, so it's going to be dependent upon what the product is, right? So you have two examples I'd put out there in the U.S. market for SMBs. One, a lending company. So companies like Bluevine and Dealstruck and Fundbox are three good examples. Those are lending companies, and those operate off of state-issued lending licenses. Other examples would be payments. So Bill.com would be a great example, recent public company as of last year, I think early last year. It's done very well. And that operates off of a money services license, state issued again. It's a money transmitter license, MTL is what we refer to them as. Each of those probably also works with a partner bank in the context of also being able to issue across boundaries of states and not have to have individual state licenses. And I'm not sure specifically on each one of those examples licenses, but that's generally speaking how you would think about it. It's what's that product, and then how is that product regulated by states or perhaps at the federal level.
All the examples you gave actually broke into the market through a state license. So that might actually be a very effective way to cut down your cycle time, and at least test out the market and prove your product, right?
Yep. I'm glad you said that. I think that's correct. And that is a trend that I've seen as these companies scale and get larger, and they need to, it's less efficient to cover, 50 or 56 individual licenses. And so they start to look at different options at the federal level, through different banking charters. So yes, you're absolutely right. That is a bit of a trend, and that is a simpler way to start and to think about the market. I would say it's simpler, but it's still not as easy as working with another institution that already has the license and partnering with them. Now when you accept that business model, at least initially, you are sharing some of your risk and reward, right? So it cuts down on margins.
Very interesting. There's one question from the audience, and I would request the audience to just start dropping questions on this window so we can pick them up. The question is, how easy is it to raise investments locally once we have set up shop in the US? I think I can even flip it and say, do you need to actually set up headquarter and set up a shop in the US to even consider raising investments into to attract investments, right? So Jacqueline, Matt, whichever of you would like to comment on this.
I can get started, and I think Jacqueline actually commented on this a little bit earlier as well. It is probably easier if you have some operations, some domestic capabilities. I think when you look at the different sources of different types of investors, I think there are some venture capitalists, and there are certainly some CVCs, corporate venture capital, that are focused on and entirely looking abroad at innovators, right? I think either because it suits their product in terms of what they're trying to do to expand globally, or because they believe that the U.S. market is so saturated with investors, it's so competitive from an investor's perspective, right? So I think there are some that are specifically looking abroad, and before you set up operations in the U.S., those are the ones to seek out. Look at who's getting funded by who and this is what I spend a lot of time doing as well. And you'll see that there are certain investors that are very, very focused on Asia market broadly, including India. And same with corporate venture capital. I do think it will be easier once you have some level of operation set up in the United States, as if I interpreted Jacqueline's comments earlier as well. I think I'd agree with that. I do think the comments we made earlier around the geography in the US, there's various differences. Certainly there's a lot of money in Silicon Valley still, on Sand Hill Road specifically, and that's changing, right? Geography here of last year with the pandemic has changed a lot, and I think we are starting to see more and more that that's not going to be the only place that money is, where deals are made.
Yeah.
You see some other trends, certainly payments down in Atlanta. You see a lot of data-focused companies coming out of the Cambridge area, up in New England, outside of Boston or around the Boston area. And you see a lot of data-oriented investors. So what I mean by that is capital markets and AI, and how are some of these data-oriented tech FinTech companies impacting the financial markets, and with algorithmic trading and things of that nature. They have a long history of doing that there, and of great companies coming out of that region. And that's what you see, where you see those types of investors as well. So there are pockets of specialization, I would say, and differences around the US. That's how I would answer that question. I don't know, Jacqueline, do you have some other views on that?
Yeah, you're right. And I was speaking a little more broadly, I think, about entrepreneurship in general, and tech companies, young tech companies in general, with the comment about raising capital. The FinTech market is, a little more fluid. And as you say, it's a little more cross-border than a lot of other, more traditional product-based or other tech companies. So you're absolutely right. It's a little more fluid. So there absolutely is investment going outwards from US companies. But just to add to your last comment, you said Cambridge, Atlanta, absolutely. Broadly speaking, FinTech investment over the last 10 years, just to give you a sense of how from foreign FinTech companies landing in the United States, so that greenfield investment, not the merger and acquisition, is going into, of course, California, New York, and Boston, as you say, but also into Virginia, Florida, North Carolina, Texas, Washington, Colorado. So it's all over the United States, right? So there are options. And as you say, they're all sort of specialized pockets, and Matt knows a lot more about the details of where the expertise is in which part of the FinTech sectors and subsectors are in each one of those areas. But You know, I mean, think about your specific product, and Matt keeps saying this, and do your research and find out where your specific market is, right? And that's where you're going to find the support you need. That's where you're going to find the connections you need. That's where you're going to find the capital you need.
I think about these three things that Jacqueline and I both have hit on: talent, collaboration, your clients, your ecosystem partners, and capital. It's those first two that I would choose a location on, and less so the capital, right? You're going to meet with your investors periodically. You can get access to them wherever they are, generally speaking.
Yeah.
I would go for the talent that you're seeking and be closest to your clients or your collaborators.
Yeah, fully agreed.
There are a couple of questions from audience, and I think the one topic across a few questions is to consider entry into the US through a partnership route with someone who's local. How critical is it to establish your setup there? I'm guessing this means incorporating an entity over there. Would not having that be a deal breaker?
Unfortunately, I have a classic consulting answer. It depends. And I'm sorry for that. I think there are a lot of reasons why you probably would want a local presence, and that business partner will feel more comfortable if you have a local presence. It's going to depend on how integrated are you within their product. And if you're fully integrated within their product and they have a presence perhaps in India, I think it's not going to matter, right? Mm-hmm. If you're sort of a visible joint product with their product in the market, and those customers are going to want to understand that you have a local presence, you're there to support them through the good and the bad, then yeah, I would absolutely put emphasis on having a local presence here.
And I would add to that too, given having gone through the experience, I think there is a leap of faith someone has to make when they're trying to be the first partner or the first customer for you, right? And anything you can do to reduce friction, if it doesn't come at an extreme cost, I think is worth investing in, especially because US is not a market where it's not 5% of the world market. It's not that extra branch office that you're going to open up. If you're serious about US, then potentially, eventually 70-80% of your business and potentially 100% of your business is going to be about US. And if it's that big a deal, it's worth making, reducing friction as soon as possible, rather than catch momentum and then realize this is a blocker for you. All right. Yeah. So I think there is one question from a Singapore FinTech lending company on how to enter the US. And Jacqueline, probably I would request them to connect with you offline because it's a lot of detail on state, type of entity, recommendations, right? There's one question which I think is generic, which both of you could, and this could probably be the last question. Let's take a stab at this. What's been the impact of COVID on fintechs? Anything that you've seen pick up actually and catch more momentum in spite of the pandemic?
Jacqueline, you want to go first, or?
I'm going to let you touch that, get that one.
Yeah, I have a sort of a interesting observation about the pandemic as it relates to fintech. In fintech, for many years, there was a discussion around what will happen to fintech in the next credit cycle or the next disruption, right? And I think there was, anyone very bullish on fintech would say, well, we've got better AI and credit and underwriting algorithms than any traditional financial services company ever had, and they will survive, they will do better, right? But there was always that question, how will it play out? When the pandemic struck, and then ultimately, very, very severe financial impact on pockets of the economy, so entertainment, travel, there was a disruption. There was an impact to those financial models, right? What quickly happened, though, is I think we've proven that they were very resilient. And secondly, I think 2 months in, probably everyone realized that this was a tipping point for digital adoption of financial products, right? And so what had been maybe some reluctant and casual momentum towards adoption became a just overnight sort of sensation, if you will. And you've seen this in the results of companies that are producing public results over the last 12 months, and especially in payments, especially in digital fintech products, so digital banks and things of that nature, they are absolutely crushing it, is how I would put it, in terms of their success over the last 12 months, their growth. And it's been incredible to watch. And so I think that's what's caught a lot of folks by maybe surprise, at least initially, because it was so, there was so much negative news happening early last year. And I think those in fintech quickly realized that this was a huge opportunity, and there's been so much progress ever since. So I remain optimistic about it. You see it in the capital markets with the number of IPOs that are out there and SPAC transactions that are going on right now. There is just an insatiable appetite right now for these companies and to get them to be public companies and to adopt their products.
Yeah, and just to add to that, in a general sense, and not just about fintech, but about entrepreneurs in general, of course, the pandemic has been, terrible for a lot of people, and has been a difficult time for all of us. But in the face of these difficult times, that's often when entrepreneurs succeed, right? They see the opportunity for adoption of new tech and wide adoption of, new possibilities. And that's what happened in fintech. I mean, it's what's been happening in some more obvious sectors like healthcare and health IT, right? But there's opportunity sometimes in these types of situations, and there's certainly that opportunity in the United States, right? And people their capital still exists. It doesn't go away, right? So there are people who are still ready and willing to invest and support, even in the face of something like a pandemic.
Very helpful, very, very relevant. Thank you so much, Matt. I know we are 1 minute over already, but thank you so much for your time. There are a few more questions which the organizers will coordinate that folks get response to offline. Things that I've learned, we always knew US was massive. It's not one market, it's many niche markets, and probably one niche could be bigger than your India market. So definitely it's worth seriously considering. When you're seriously considering something, reduce your friction, commit yourself to the end goal, and try and get accelerated on your go-to-market by finding potential partners locally. There are other ways we have thought you could simplify your cycle time by going through state licenses versus central licenses, for example. But these are just tip of the iceberg, right? These are just ideas that came as part of this conversation. And I would strongly urge folks to leverage resources that Select USA is putting together and EY is putting together to make sure that you don't lose time in trying to learn things that have already been learned and discovered, right? So thank you so much, everyone, for making time. Matt, thank you, Jacqueline and Brenda. And thank you to the EY team and Mumbai FinTech Hub team for helping us put this together.
Thank you.
Thank you.
Have a good day.
Thanks,
Bye.
Al.